Imagine Bitcoin, the most battle-tested asset in history, finally coming alive, not just as digital gold sitting idle, but as the backbone of smart contracts, DeFi, and real decentralized applications, all without touching a single line of Bitcoin's code. That future is already here, powered by one project building the bridge every Bitcoin maximalist has been waiting for: Stacks. Welcome to the generational wealth community, your pathway from knowledge to legacy. We don't chase hype, we decode the market. Let's walk through the full story of Stacks with Bitcoin, where it came from and the exact problem it solves, and the clear outlook ahead as we sit here in early 2026. The roots of Stacks go back to 2013. Computer scientists Monab Ali and Ryan Shih, both Princeton alumni. They launched the project originally called Blockstack. Their vision was simple, yet ambitious: a user-owned internet built on blockchain technology, where people truly control their data and identity. By 2017, they had raised early funding and completed an initial coin offering. Then in 2019, Blockstack made regulatory history, becoming the first project to launch a fully SEC-qualified token offering, under Regulation A+. In October 2020, the community rebranded to Stacks, and on January 14, 2021, Stacks Blockchain 2.0 went live. At launch, introduced Clarity, a purpose-built smart contract language designed for predictability and security, along with proof of transfer consensus that directly ties Stacks mining rewards to Bitcoin. The network kept evolving. The biggest leap came with the Nakamoto upgrade, which fully activated in late 2024. It slashed block times from roughly 10 minutes down to about 5 seconds, and delivered 100% Bitcoin finality. Once a Stacks transaction confirms, reversing it would require reorganizing Bitcoin itself. Shortly after, sBTC launched, a trust-minimized, decentralized two-way peg that lets Bitcoin move onto Stacks and back without custodians, finally making BTC a fully programmable asset on its own secure layer. So what core problem does Stacks actually solve? Bitcoin is unmatched in security, decentralization, and liquidity. Hundreds of billions, soon potentially trillions of dollars sit in Bitcoin, yet its native scripting language is deliberately limited. It was built to be the hardest money, not a general-purpose computing platform. That means complex smart contracts, fast decentralized exchanges, lending markets, or yield-generating applications simply could not run natively on Bitcoin without compromising its core strengths or overwhelming its block space. Stacks fixes that without ever changing Bitcoin. It operates as a true layer 2. Every Stacks block is anchored and settled on the Bitcoin blockchain for ultimate security. Developers gain Clarity smart contracts that can read Bitcoin's state directly. With sBTC Live today, those contracts can now write to Bitcoin in a trust-minimized way, and use actual BTC as the native asset for DeFi, NFTs, and beyond. The result? Bitcoin's passive capital becomes productive capital. You keep Bitcoin's ironclad security and finality while unlocking the rich application layer that Ethereum and others built. But without the trade-offs in trust or decentralization, it is the cleanest way to grow the Bitcoin economy rather than compete with it. Looking ahead, the outlook for Stacks is grounded and compelling. The network has already shipped upgrades that boost effective capacity for DeFi and applications by up to 30 times, keeping transaction speeds fast and reliable even as usage grows. Institutional infrastructure is now live. Fireblocks integration in early 2026 gives over 2,400 enterprise clients direct custody of STX, minting of sBTC, and access to native Bitcoin DeFi protocols. Thousands of BTC are already deposited into sBTC, and more bridges and listings are rolling out this year. As Bitcoin continues its role as the ultimate store of value, Stacks is positioned as the leading on-ramp to activate that value. The token itself, STX, currently trades at approximately 22 cents, with a market capitalization of nearly $400 million. Utility is rising with every new protocol and institutional connection, and the roadmap focuses on even tighter Bitcoin integration and broader liquidity. If Bitcoin DeFi adoption accelerates, and all signs point that way, Stacks stands to capture meaningful market share as the most secure and capital-efficient layer for it. Of course, crypto remains volatile. But the fundamentals here are anchored to Bitcoin's own strength, not fleeting narratives. If this deep dive on stacks with Bitcoin opened your eyes to a smarter way to think about Bitcoin's next chapter, hit that like button and let's keep building knowledge together. Subscribe for daily recaps, drop a comment on your biggest takeaway, and turn on notifications. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.